This is another episode of Be Documented Today. It's a process that I'm taking to achieve long-term consistency in the financial market. And there's a lot happening with my trading right now, a lot changing because I'm realizing what I've been doing all this time and how hard that's made trading and how it doesn't necessarily fit my trading personality. So the way that I traded today was definitely experimenting with, okay, what exactly am I trying to do? And what is the way that I'm trading and how does that fit my personality? So, one major change recently, lowering RR, increasing win percentage, wider stop loss, shorter target. Things like that. Just making shit easier because the way I've been trading, I'm demanding such precision from the market that it's just not working out. It's just too difficult. It doesn't have to be that difficult. It really does not have to be that difficult at all. So I have the instant funded account from Top One Futures. I took 3 trades today, ended up closing out with $89.56 in profit. But the main takeaways from today are some good things that I'm doing. Number one, I'm not letting moves in the lower time frame shake me out from my higher time frame bias. And I think that's definitely something I struggled with previously because let's say the market's bullish on the daily time frame, right? But we have a huge drop in the morning session. That doesn't mean that I'm bearish automatically just because we've had a huge drop. The higher time frame is still bullish, so if anything, that's just setting up the next up move. And then another one would be stacking probabilities in my favor. So I think the way that I've been trading recently, not I think, I know. The way that I've been trading recently is just extremely subjective. It's just based on pure feelings and thoughts instead of, okay, how many different confluences do I have right now at this moment that tells me the market should go up or go down? And that's what I did today. The first trade that I take, I'm looking at the hourly, the 15, and the 5, and the 1, and there's no confluences there. Therefore, it is a loss, right? But the third trade that I take, I look at, okay, how many different confluences do I have? How many things can I stack or how many things I can use to stack the probabilities in my favor? And that's what I did on the second trade, and that's why it works. So let's get into it. All-through market approach. My initial thoughts today is that it does not look like a good trading day because we have an overnight range. Let's go to 15-minute chart. So typically when we have an overnight range like this, and the market opens in the middle of that range, it's not a good trading session. But at 9 o'clock, right before the market opens, in the last half hour before 9:30, information changes, we get a shift. Boom, we leave the high of the range first. One thing that I noticed is how we have this sell accumulation above. If we go to an hourly, it's easier to see. We can see we have this high here, ran there, this high was ran there, this high was ran here, and now this high was ran here, and then boom, finally a large poke up, right? So this isn't really looking too bullish with the market opening high. And that's why initially I come into the day with a bullish bias, but then I'm like, you know what, there could be a sell developing. And it kind of tripped me up intraday. So going back to pre-market plan, the higher time frame narrative, the bias of the weekly range remains bullish. Nothing has changed. Nothing has happened to make that change. Yesterday trades into Monday's down range and closes higher. So in the higher time frame, putting those pieces together, nothing has changed. We're still bullish, and I think the draw on liquidity is probably going to be this high. This is Monday. Monday trades down into this. Inefficiency here, closed above it. That's bullish. Following day, Tuesday, up candle, overlaps the down candle. That's bullish. Wednesday trades down into that range, closes above it. That's also bullish. Leaves this discount wick. Now today we open high on that in a consolidation range, and the first thing that it does is pop out of it, right? So today consolidates at previous day high, respects consequent encroachment at the daily volume imbalance, and then leaves the range up. I still think it's a slow roll to a new all-time high. We've been in this condition. So nothing changes. Nothing changes in the higher time frame, right? So my trade plan. Price is likely to open high in the day, so I want to wait for a discount to be offered and new inefficiencies formed. This was said at 9:19. So this is 10 minutes before the market opened. And if we look at what price did before then, 9:19, so that was like right here, right? So at this point in time, I'm thinking, okay, we're opening high on the day. We have these large obvious gaps. We've consolidated near previous day high, and we took the high of the range. With these obvious gaps, I'm going to wait for them to form and then see if price can drop into them, offer a discount, and then to keep trading higher. That's initially what I was thinking for. I thought that was the play. But if I looked at more details, we see that what happens on the 9 o'clock candle, there's no lower wick, right? There's literally no lower wick. There's nothing there. So on the hourly range at that point in time, this candle was an up candle with no lower wick, and you can see how it ended up closing, right? So typically when we get that, the higher time frame candle ends up flipping. So at the start of this 1 hour range, 9 o'clock, there was no lower wick, which means odds are we're probably going to come back down to the open price of that hourly range at some point in time. And this is what leads to, we have the range, trade up out of it, and then boom, flip it to the other side. But I'm not expecting this down move to last because the higher time frame is still bullish. Nothing has changed. Nothing has changed, right? But we had this really, really large sudden drop early into the open, and that had me thinking I was not comfortable with my read on price. And this was good. This was very good, very, very good what I did today when I knew that I was not comfortable with my read on price. So I sat out of the market. I did nothing. I did absolutely nothing. So I'm not comfortable with my read on price. I think there's too many different possibilities that could play out, and I'm not sure which one that is. So I'm not comfortable putting risk behind anything. I think this could be a dive to manipulate the range low and keep trading higher. So this is what actually happened right here. But then at the same time, I'm looking at the previous day range, and it could be one big low resistance liquidity run. So there's also, the possibility for it to go lower. All trading is, and this is what I realized. This is what I tried to say at the beginning of the video. What I'm coming to realize is trading is literally. Well, I'm realizing this. I already knew this, right? But I'm actually implementing it and thinking this way. Trading is literally just statistics. It's literally just probabilities. It's literally just this outcome is likely to happen. Trading is literally just a series of different outcomes. You are looking at the market, you're doing your technical analysis, and you're laying out the different possible scenarios. One of those is going to play out. You don't know with 100% certainty which one it is going to play out, but you do know that there's one that's likely to play out, and that's it. So at 9:35, I'm laying out the different possible scenarios because trading is a game of probabilities and statistics. I'm laying out the different possible scenarios and thinking, okay, which one's going to happen? Well, I can't confidently arrive at one idea happening over the other. So what do? Nothing, because that doesn't put me in a position where I have a probable outcome at all. So I do nothing at all. That's it. So early into the open, when we have this boom, sudden drop right here, and at this point in time, the market was, let's say, it was 9:35, right? So it was the first 5-minute candle had closed, and I have this information. I don't have anything else aside from that. So all this is not here. All this is not here. All I have is this large 5-minute down candle. At this point in time, I'm looking into yesterday's range. Low resistance to liquidity. There's nothing really here for the market to grab onto, right? But at the same time, I'm thinking about how is this daily candle going to paint? Is this going to be a large down close candle? Probably not, because the higher time frame is still bullish and nothing has changed that. So I'm weighing out the different potential scenarios. Number one being we trade back up into inversion fair value gap and trade down. Or number two being we trade down, keep pushing down, manipulate the low of the range, and then trade up, right? The two different possible scenarios that I laid out here. But I don't have confidence in one idea over the other. So what do? Do nothing. It's a game of probabilities. It's a game of possible outcomes. It's a game of scenarios. But the scenarios are not absolutes. They are just potential things that could happen. It's probabilities. This is what I'm starting to realize. And the only reason that I'm starting to realize this is because I now have a trading coach. Finally. I've been looking for one for so long, and it's literally my brother's friend. They're both real estate agents. They both work in the same room together and do the real estate thing all day long. And so now I'm just having conversations with him is literally opening up my mind to how winning traders think. And everything that I've done so far has been completely subjective. And now I'm thinking, okay, all I have to do is stack probabilities in my favor. Give me a likely outcome. That's it. That's all I need. The problem is I've been trading in positions where there is no probable outcome. And because I'm not thinking that way. I'm not thinking that, is this likely to happen? I'm not thinking like that. I'm not thinking in terms of probabilities, but now I am. So now I'm starting to think like a winning trader simply by literally just having one phone call with a winning trader. It just really opens your mind up. So I'm not comfortable doing anything because there's no probability. There's no probability of anything playing out in my favor right now. So why would I put risk behind anything at all? I wouldn't. And so that's what makes the first trade that I took such a low probability trade, or such a shitty trade, because there was no probabilities in my favor, right? Eventually, how I read the market was we kept trading down. I'm thinking about the higher time frame, thinking about how this daily candle is going to close. It's not going to close lower. I mean, look what we've been doing recently, right? And look how we're just sitting in this consolidation range. I'm thinking this daily range is probably going to close indecisive, and I'm thinking we're just going to manipulate the low of this range and push back inside it and kind of hang around where we consolidated overnight, because you can clearly see that price has a lot of interest being in this area right here. It spent a lot of time there, and notice how we just gravitate back towards to it. So Not expecting the drop down to last. Another reason why I'm not expecting the drop down to last is because look how high resistance the move lower is. Typically when moves are high resistance, it's not the real move, it's a fake move. Low resistance moves tend to be the real moves. High resistance moves tend to be the fake moves. And you can see how the move lower slows down. We lose volatility, we lose volume. We don't really do anything. We have a low here, we take that low here, this low gets taken here, this low gets taken here. So I'm noting long accumulation. This is what long accumulation looks like in my eyes. When the market slows down against high resistance, each range overlaps the previous. And then we just start poking out previous lows without really making any kind of sudden displacement, no really real move, right? Now, I only have confirmation at this point in time on the 5-minute time frame, and that is the issue with this trade. If I only have confirmation on the 1-minute time frame, which I really never even had, I never really had any PD array to enter off of on the 1-minute time frame, are the probabilities in my favor? Absolutely not. Because at the time that I took the first trade, which was 9:56, what does the 5-minute look like? Does the 5-minute tell me that this should go higher, which would be the 9:50 candle? Do I have confirmation on the 5-minute? Well, we formed this swing low here. We took that low here, and we also took this low here. So we have 2 consecutive drives below a previous 5-minute low, and the candles are closing above, yes. But do I really have any solid confirmation on the 5-minute telling me higher? At this point in time, no. So no confirmation on the 5-minute. On the 15-minute, this trade is taken within the 9:45 candle. Is there any confirmation on the 15-minute at this point in time? No. So no confirmation on the 5-minute. Okay, let's look on the hourly. No confirmation on the 15-minute. What about the hourly? Well, it's taken within the 9 o'clock range, right? Because I took it before 10 o'clock. Is there any confirmation on the hourly that I get to take that trade, to think that the market should go higher at this point in time? No. So no confirmation on the 1-minute, no confirmation on the 5-minute, no confirmation on the 15-minute, no confirmation on the hourly. Where's the edge? There's no fucking edge. There's nothing of probability that indicates the market could go higher at this point in time. There's nothing probable there. It doesn't make any sense at all. At all. So I simply buy the market on a change in state delivery here, and then I literally get stopped out 2 minutes later because there's nothing there to tell me the market should go higher at this point in time. There's no probability there. The second trade is better, a lot better, and it's taken at 10:28 because at this point in time, I'm already anticipating the long, right? I know it did not work here. Okay, maybe I just mistimed the move. Look what we do here. We stab this low here, boom. But again, still high resistance. No displacement, no nothing. So I'm off. I'm trade off. What do? We end up forming relative equal lows. We have this low here, higher low here, and then boom, dive lower. I'm already anticipating this dive lower to fail because of the long accumulation that I'm seeing down here. And I'm noting how every time we take a swing low, this is the kind of reaction that we get. Very high resistance. The move is slowing down. Not expecting continuation of a down move. So finally, we get aggressive displacement. This, probably just getting traders in there, short, chasing the move, takes out the relative equal lows, and then boom, displacement the other way. I'm not hesitating. I'm not thinking this is what I was already anticipating. Now I really do have the confirmation confirmed by displacement on the 1-minute. Okay, now let's look at the 5-minute. Do I also have confirmation there? We can see the relative equal lows in the 5-minute, stab it out, and then boom. I see this candle developing as a large up close candle after taking sell side liquidity. Yes, I have really, really solid confirmation on the 5-minute. Now on the 15-minute, I also have solid confirmation as well because we have this 15-minute low taken here. Now I have this 15-minute low taken here. Confirmation on the 15-minute as well. Although this candle was painting at that point in time, I can get an idea of how it's going to paint because we've already taken this low, right? On the hourly, a little bit of confirmation. Better than trade 1, right? Because we have cleared an hourly low, but still not the best confirmation. We did clear the 9 o'clock low. So right then and there, we can see how much more probable this trade is versus the first one. The first one, there's nothing there. There's no probabilities stacked. I did not stack the probabilities. I did not stack the probabilities. That's what I need to be focused on. Stack the probabilities in my favor. How many different confluences can I have across the different time frames that tell me the market should move where I anticipate it to move? That's it. That's it. Stop trading subjectively and just think about, is this likely to happen? Like, literally, that's it. Is this likely to happen? That's it. So this trade, you can see at one point in time I was up $262 in profit and it came back for break even. What ended up happening, my stop loss or my take profit was going to be at 25,640. Now, why am I aiming for that level? Because, let's go to 1 minute. I'm aiming for new day opening gap and previous day settlement. That's typically a really strong draw on liquidity, as you can see right here for the second trade, or for the third trade. This high is tucked just below that, 25,640. So I'm not even expecting the market to run out this high. I just want it to reach up into that area. And you can see that it literally came, what, a couple of points within that take profit, right? And then reverse or break even. That's fine. It's a break even trade. Shake it off. One good trait that I have right now is that losses, they really don't do anything to me. I'm extremely resilient to loss simply because I know that's how I have to be as a trader. Like, I literally just have to shake them off instantly like this. Like, they can't bother me in any kind of way. Winning traders don't let their losses affect them at all. Winning traders are the best losers. That's it. The best loser wins. Book by Tom Hoogard. Great book. Definitely recommend. But it's true. It's definitely true. So although this comes back and break even, doesn't really affect me mentally. Yes, I could have gotten out earlier. Yes, there's a little bit of things that I could have done different, but I'm not really upset about that trade at all. It's a good trade. It's what I was looking for. It was in alignment with what my plan and what I was looking for. And my read on the market, it's not a bad trade. Now, finally, trade 3. What do we have here? Now we have one run, 2 run, 3 consecutive runs on sell side. Look what we have left above. This high was not taken by this high. Relatively equal. New buy-side liquidity engineered. There's people selling short in this move. Where are they going to put their stop loss? Here and here. We have a double top here, right? But look at where these highs are placed. Look at where these highs are placed. I'm going to remove this. They are placed literally just below the new day opening gap. We have buy-side liquidity now tucked just below the new day opening gap. And this is something I've seen before. That's a really strong draw because now we have liquidity paired with new day opening gap. And what do you know? Draws right back up to it and then reacts off of there. So there you go. Dive below this low, third consecutive run, inversion fair value gap on the 1 minute here. But I'm going to wait. I'm going to wait and I'm going to really let this become confirmed. So although we have the 1 minute inversion fair value gap here, which confirms that we are now in a buy program going higher, we should be seeking buy side liquidity, opposing liquidity, which we end up doing. Here's your market maker buy model. I'm going to wait. On the 5 minute, what do we do? Well, first of all, I note the 15-minute close, right? So now we have a low formed here that gets taken. This low gets taken. And now this low gets taken. 1, 2, 3. 3 consecutive runs on sell side. And this is typically what leads to reversals. It's usually 1, 2, or 3, or 2. That's it. But the candle closes above it, so now we have a new discount array. So I'm annotating that, and look how this candle trades. Trades right down to the upper quadrant, and then that is what produces the 5-minute inversion fair value gap. So I'm noting that reaction. I'm noting how he traded right down to lower quadrant, and then boom, produced this large up candle, created inversion fair value gap. That's a buy. So I enter in on this candle right here with the limit order here because we have the inversion fair value gap. It's simply the inefficiency in the price leg that has removed the liquidity from the marketplace. That's my entry model. That's what I'm using. And I should just be focused on just doing that, just sticking to that one thing, which is what I used in trade 2 and trade 3, but not trade 1. Trade 1 was the shit trade using what? Order blocks. The thing about order blocks is they allow me to get into trades way too easily, which is why I'm taking trades on the 1 minute time frame with no confirmation other than what's on the 1 minute time frame. And because it's only on the 1 minute time frame, are the odds stacked in my favor? No. So it never works out, and that's why my win rate is so shit. You know, there's a lot that I'm learning right now. There's a lot that I'm learning right now about my trading that a lot of you guys have literally just been telling me in the comments for weeks. And I'm only able to actually interpret these lessons and realize where I'm going wrong because I talk to a winning trader. So there you go. That shows the importance of having a mentor, someone who has already done what you are trying to do before you. Extremely important. Extremely important. This is what I've been lacking, so I'm excited. But 5 minute confirmation, is it there? Yes, obvious, clear as day. 5 minute version fair value gap. It's literally the lowest imbalance that we have. It's so easy, so clean. 15-minute confirmation, is it there? Yes, we have 3 consecutive runs on sell side and a discount wick formed. And now on the hourly time frame, is it there on the hourly? Yes. Why? This is the second consecutive run on an hourly low now. And another added piece of confirmation. What do we have? SMT divergence. So there you go. How many different confirmations do I have? 1 minute, 5 minute, 15 minute, hourly, SMT. 5 different confluences telling me up at that point in time. What does that mean? Are the odds in my favor? Abso-fucking-lutely. That's it. That's all it is. Now, the exit on this trade, I actually botched the exit on accident. If I pull up the trade, we can see, yeah, let's just go here. So I was aiming for those relative equal highs, right? Let's go to 1 minute. I was aiming for new day opening gap paired with buy side, but I took off early because I accidentally dragged up the stop loss instead of the take profit. And so when I let go of it, it just automatically tagged me out of the trade, which was a blessing in disguise, because what I was told to do by so-called trading coach was to just take off at an area where I would have a $357 winning day, which means I would have to make over $500 on this trade, which means the take profit would have never delivered, and it would have came back on me for break even again for a third time. So I got blessed here. I made a mistake, and that saved my ass, because I would have moved a take profit to a further objective that would have never hit, and it would have came back on me for break even for a second time in the same session, and that probably would have destroyed my mental. So just pay yourself. Like, the way that I trading has to be done thinking in terms of just realizing gains, not thinking in terms of how is the fastest way that I could possibly get a payout. That's kind of how my trading coach thinks. I'm just calling my trading coach for now. But I've definitely learned that lesson in the past, and I can't be repeating that. So I got saved here. I definitely got my shit saved here. This should have came back on me for break even, because if I did not accidentally put the stop loss up instead of the take profit, this shit would have never hit. I would have gone for a farther objective, as I've done in literally like 20,000 different trades, and it would have came back for break even. So that is basically what happened today. If we look at how I've been trading for the week, still at a 37% win rate. So like 1 loss, 1 break even, 1 win, 2 losses, 1 win, a loss, a win, and a loss. So I've traded a lot this week, but I'm figuring out, how to stack the odds in my favor, what confirmations that I look for. Again, the way that I've been trading has just been extremely subjective and very, very lenient on my analysis. All I need to do is look at the fucking chart and be like, is it likely to go up at this point in time? Yes. Why? Because it's there on the 1 minute, 5 minute, 15, and hourly. That's it. So I think too much. I think way too much. Just look at the technicals, okay? Does it give me a probable outcome? What's up, G?
What's up, motherfucker?
Is it lunchtime?
Lunchtime, bitch.
You're in the video.
Let's fucking go. All you motherfuckers out there, you don't even know what's coming. It's coming.
All right, that's the end.
End this shit. We gotta make food.